investors, the thought of picking stocks manually might be intimidating. Fortunately, with instruments like index funds and mutual funds, you don't have to do any of the labor to start your investment journey. In this video, we will tell you everything you need to know about these investment vehicles so that you can make the right decision. Hi everyone, I am Prarthana from Clear. We are India's largest tax and financial services platform where we have served more than 6 million filers so far. Subscribe to our channel to get investment tips and learn more about growing your money. A mutual fund is a trust that collects funds from a group of investors with a shared investing goal. The money is then invested in stocks, bonds, money market instruments and other securities. Units which reflect a share of the fund's holdings are owned by each investor. By determining a scheme's net asset value or NAV, the income or gains earned from this collective investment are then split proportionately among the investors after deducting certain fees. Simply put, a mutual fund is one of the most accessible investment options for the average person since it allows them to invest in a diversified, professionally managed portfolio of securities at a reasonable cost. Many investors are aware of the benefits of diversifying their portfolios across sectors. Index funds often catch investors' attention as they intend to replicate the performance of their underlying indexes such as the Sensex or the Nifty. All the stocks in these indices will find some representation in their investment portfolio. This theoretically ensures a performance identical to that of the index which is being tracked. The low expense ratio is its main USP. Index funds are not actively managed funds, thus incurs low expenses. They do not aim at outperforming the market but instead to track an index. They help an investor manage or balance the risks in their investment portfolio. Is the mutual fund market in India making sense? If it is, then please write clear in the comment section below. So, let's look at the difference between mutual funds and index funds.
Number 1. Management style. Actively managed mutual funds require fund managers to decide the combination of assets and the proportion of investment. On the other hand, index funds are passively managed. These funds track popular benchmarks like Nifty 50 and invest in the same exact units in identical proportions. Next, expense ratio. Fund managers have to constantly perform extensive industry research with mutual funds. Thereafter, they choose the securities to mobilize available assets. This is why the expenses of such funds are sufficiently high. Index funds require negligible involvement of a fund manager. As a result, these funds feature affordable expense ratios. Thirdly, performance. Mutual funds, especially equity-oriented ones, aim to outperform the current market benchmarks. During a market decline across different sectors, these funds beat the market performance and offer higher returns. Index funds hold a record of outperforming mutual funds more than 80% of the time. This is because the former tries to emulate high-performing benchmarks like Nifty 50. Fourth, simplicity. An investor, while choosing a mutual fund, has to do extensive research before selecting a fund. Past returns, mutual fund managers' historical return, total AUM, etc. need to be considered before investing. Index funds that track the same index usually have similar returns. It is simple to understand and the decision mostly comes down to expense ratio and tracking error. Lastly, risk. In the case of mutual funds, the risk heavily depends on the market capitalization of holdings. Large cap funds are known to offer stable returns against low volatility. The risk in index funds depend on the underlying index. They are pretty well diversified across sectors, so volatility is reduced considerably.
So folks, I hope by now you have understood the difference between a mutual fund and an index fund. You can start your investment journey by downloading the Black app by ClearTax from the link given in the description box below. Download the Black app as it will help you grow your wealth and invest wisely. Also, don't forget to subscribe to our channel for more finance related content. See you soon in the next video. Take care and goodbye.